Hey guys, how are we doing? Crypto Insight UK here, bringing you back another video. So today I'm going to have a look at the question, is the bottom in? As you know, yesterday we talked about potentially there being one more push down for the bottom, but I wasn't sure. I'm going to discuss a more general bottom. Like we've been looking at really short-term price action recently. I'm currently not in any positions. I'm a bit like this, like I don't know exactly where we are in terms of short-term price action, but I want to confirm to you guys how I feel about the medium term and the long term, because I'm getting like sarcastic comments on my post saying, oh, I thought this and this and this. Guys, I'll do my best to analyze the information I've got in front of me and give you my thoughts on where the market is and what it's doing. We absolutely nailed the bottom, the long of XRP. We nailed the close at the top. We also nailed the pullback to the area that we're in now. Like, I can't get much more accurate. But timeframes and calls are never always going to be 100%. Like I say, it's like I always compare it to poker, and you play the positive expected value hand. Like, if you have information that's given you, or you analyze that there's a specific thing that could happen, you put your eggs in that basket, and sometimes you win and sometimes you lose, and trading's about winning more times than you lose. Also, not about taking too many trades. You trade when you have the positive expected value, when things are in your favor. So right now I'm in no trades because I'm not sure in the short term exactly where we go, whether we go up or down. So why would I have a trade on? It's just gambling. And everyone who is putting trades out all the time, like bang, 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 like if you see someone hitting trades all the time, most likely they've probably got a trading service they're trying to sell you. They get paid by the exchange. Well, they get commission on every single trade that you open or close. So they want you opening and closing trades as many times as possible so they can rake in that commission. So just be aware of things like that as well. So we talked about this yesterday. This is Bitcoin's fair value gap on the 4-hour. So this is a potential area for Bitcoin to bounce. So far, we've seen quite a strong reaction from this area and looking potentially for that to continue. So just starting on, there's a bit of short term, and then we're going to go into what I think about the medium to long term. So also looking at XRP, we bounced in the area that we discussed. Look, we talked about this first area of interest where I said I would be putting some longs in, but as I've just told you, I've not actually got any longs in right now. We've taken that bounce and just assessing what happens today, essentially, because there's been a lot of like macro news. It's very choppy out there. People are up and down emotionally. In fact, emotionally, let's have a look at the fear and greed index. I don't know if I've been looking at that today. I don't think I have looked at that today. We're at 20. Extreme fear, been extreme fear for the last week, and still in extreme fear right now. Long period of extreme fear. Look at where we are in comparison to. It's been a good time to buy whenever we're in extreme fear historically. And now I just want to spend this video talking about what I think comes next and where I think we are in the cycle. First off, I really want to recommend reading this. I talked about it a little bit yesterday, but Arthur Hayes is The Kiss of Death. I'm going to read it again today. I've read it twice already. He talks about Trump, essentially. He talks about how Trump wants to be seen by the world. He talks about how Trump is like manipulating potentially a short-term pullback in the economy to be able to bring the Fed into his policies. I've discussed all this with you before. And then he goes on to discuss how and what comes next for crypto and why he thinks that crypto could do significantly well during the Trump term. Also, would like to point out that I do write a weekly newsletter with the Crypto Man. We're on edition 131, but we actually did 52 editions that were paid for before this. But I was just like, look, let's make all our work free. Give it a like there. That's how you do it. Just hit that like button. It helps that a lot. 131 editions, and we've done another 50 or so that was on Patreon, but then we closed that. This is out every week, completely for free. We do some larger thoughts on the markets and then some on-chain analysis, and Pab does some charts of the week for you as well. So just quickly looking at liquidity before we touch on everything else. We talked about liquidity being more liquidity above us than below right now. We've basically taken the majority of the liquidity that was below. If we go to the daily time frame, I'll show you this, just refreshing everybody who's new to this channel. There's a little bit look below us, but look above. There's significantly more liquidity above us than there is below. So it's imminent for me for a move to the upside. Exactly when is the difficult question. So with all that being said, what am I looking at for potentially pushing back towards the upside? The DXY, the first big, we talk about this most weeks actually in the newsletter. One of the first big indicators that the foundations for a crypto bull run will be underway is when the DXY starts to weaken. Why is that? Well, when the dollar or the DXY gets strong, often means there's less liquidity as people are holding dollars and not parting with them, meaning there's not a lot in circulation. As the dollar is strong against everything else, then that means that it's not being deployed into assets. People are holding their dollars hard, and the banks will be holding their reserves because people can't access the dollars, and then because the dollars can't be accessed, they're not traded so much, and because of that, this is one of the reasons that the dollar gains strength. So when the dollar starts to weaken, it means that there's probably going to be more liquidity sloshing around, and when there's more liquidity sloshing around, that goes into assets. If the dollar is weakening, people want to hedge against a weaker dollar, so they buy assets, and assets in turn go up against that dollar. So that is one of the foundational reasons why we look for the DXY weakening. If no one's ever really explained that to you, that is because everything's valued in the dollar. It's the world reserve currency. It's the denominator. So everything that's valued in the denominator, if the denominator gets weaker, they get stronger. So that's what we're looking for. I've been projecting that we see a dollar breakdown. I didn't think we would get this spike above the range. Yeah, if we look at what has happened in Trump's presidency historically, he's brought the dollar down. He's also discussed how he wants a weaker dollar with Scott Bessent, who's the head of the Treasury. Arthur Hayes suggested they could revalue gold as a way to bring it down. And I'm no expert in anything like that, so I don't even know if that's possible. But this is the technical analysis that I've been showing. Hitting the 702 Fibonacci retracement here after ranging for some time. And I've been looking for like this 95 region for a pullback for the DXY. A potential overextension target into this area here between 89 and 92, 91 and a half. But then there is actually potential, I think it would only happen if they revalue gold probably, but we could come all the way down to here to the 78 region. I don't know what that means for the economy worldwide. However, as Arthur Hayes discusses in that article, eyes on China as well. So there's going to be some sort of agreement probably between the US and China. And this short term, as I said, this short term fear in the market where Trump's trying to get what he wants. He's putting tariffs on other countries and stuff. These will, in my opinion, one of two things is going to happen. Out the back of that, there's going to be great negotiating terms for the US because I think he's a showman. He wants to be seen, as Arthur Hayes again talks about, as a great president. In the end, he judges his wins and losses by the price of the S&P. So don't think that the S&P is going to come down under his watch unless he completely fails in his task, which is possible because both sides of the political parties really hate each other at the minute. But realistically, one way to push the S&P up, even artificially, is to weaken the dollar. And another way is to create really great ties with those across borders. But to start with, you have to give yourself some leverage. And I think that's what's happening right now. That's where I put my chips. This is why I keep saying everything looks good in the longer term. So also another different factor, but not along the same lines-ish, but not exactly, is eyes have really been on gold. There's been a lot of gold moving from London to the US recently. We have been discussing the short-term correlation of Bitcoin and gold. I think gold, we would like to see gold pull back a little bit, but obviously as the dollar weakens, people will move some assets into gold because it's a hedge against the strength of the dollar. So realistically though, if we go to the 4 hour, I don't know how obvious this is going to be anymore, but we would draw in the comparison. I'm going to take this Fibonacci retracement off because look, it's finding difficulty at the retracement levels again. I'm going to take this off. I'm just going to compare it here to Bitcoin. Because what we have been seeing recently is, although they are correlated in the medium to long term, they have been moving inversely in the shorter term. So as Bitcoin pulled up, gold was down, and then gold started to come up and Bitcoin came down. And then recently, they did both drop together a little bit, and then Bitcoin did its recovery, and then gold followed, and then hopefully gold now pausing out. I'm going to come back, and then Bitcoin goes for its run. It's kind of like they're moving in the same direction, but taking it in turns, almost like sine and cosine waves. So that's something that I would definitely be looking out for. We also want to have a little check-in on the S&P. Let's just get that. Let's take Bitcoin off for a minute. Obviously, we know the S&P moves quite similarly to Bitcoin, but the S&P, people are getting super fearful. It's broken some key levels. It's had 7 days or 5 days of red or something like that. How many have we had? We'll have one green day in here, but look, we've had just deathly price action. Everyone's getting super fearful, and but we're getting big volume coming in at supports, and we aren't seeing massive capitulation in price currently. So for me, this is spelling that I think this is a bear trap. I think we've got a blow off top to come for the S&P, and I think we could go much higher because of the reasons that I've just discussed with gold, because of what I think Trump's trying to do in the wider market. For these sorts of reasons, I think we could go higher for the S&P. I'm also going to reference something else that happened today. So obviously Dan Tapiero is talking about 2 years are at 4%, so we have plenty of room to move. He's talking about true inflation being at 1.5%, which means that essentially the Fed at some point will have their hand twisted. Their hand is being twisted by inflation. They're going to have a shrinking economy. We've seen GDP came out yesterday for some quarters. I can't remember where it was reported, but in the US, negative GDP and inflation down at 1.3%. The Fed needs to probably start to relax on monetary policy / ease or loosen monetary policy. Otherwise, there's going to be a big spotlight on them to say that, look, it's the Fed that are stopping the economy from doing well. And then this from Arthur Hayes again yesterday, basically saying that Germany abandons financial shackles to transform Europeans' defense. Germany have basically said they're going to spend even outside of what they're allowed to spend only if it's on defense. But what I'm pointing out here is this is the beginning, potentially the beginning of the end of our fiscal policy or the economic policy that we've followed since World War II. When countries start to break rules to increase spending because of debt or military concerns or whatever, any excuse to break a rule, if it's followed through, is obviously a rule broken. So unless this is reversed, I presume it will be followed by other countries for other reasons. And as you get further down the line, more and more countries start to follow this rule. But essentially what it means is more capital is probably going to flow into the system. And if more capital flows into the system, your assets probably increase in price. And when I say capital, I mean like money, like fiat currency flows into the system, your assets probably increase in price over time. So I'm bullish. I think network adoption is continuing for crypto. I think the biggest country in the world in terms of finance is embracing crypto. We've got a meeting on Friday about crypto. The short-term price action, you're now in the field of the biggest and best market manipulators in the world, and you're worrying about short-term price action when you can see everything long-term is starting to point towards assets to have a big bull run, probably bigger than something we've ever seen, in my opinion. And it would be, and that's not like hyperbole. It would be because currency, there's more currency and more debt out there than we've ever seen. So obviously that makes sense. Hold on. If you believe what I'm saying, if you don't, sell or switch your laptop off. Like, honestly, I really don't care. I'm here to try and help you. But if you want to just like argue and be emotional about it, that's fine. If you've got logic and reason behind what you're doing, or if you need the money, sell out. Like, it doesn't make a difference to me. I do all this for free. I do it to help you. I just like to give my opinion online, share my experience with you who might not have all their time to be able to research what I research. It's up to you what you do with it. But if you did enjoy the video, I appreciate it if you hit the subscribe button, press the like button, and share it with a friend. Peace up, A-Town down, as Crypto Insight UK would say.